Well, the National Bureau of Statistics has revealed that Nigeria recorded 3 trillion naira negative foreign trade balance in the third quarter of 2021 as total import hits 8.2 trillion naira against 5.1 trillion naira in the period under review. Statistician General of the Federation and Chief Executive Officer of the National Bureau of Statistics, Dr. Simon Harry, disclosed this at a press briefing in Abuja. He says Nigeria's export was mainly dominated by crude oil, which amounted to 4 trillion naira. Meanwhile, premium motor spirit valued at 1.05 trillion naira topped Nigerian import trade.
All right, for a closer look at this development, we're joined by Arise business analyst Bode Ososami. Bode, glad to have you join us. Well, you've been kind of going through the latest trade report. How do you explain the more than 3 trillion negative foreign balance? What are the opportunities to reduce this trade deficit?
Well, thanks for having me on the show, Andy. Indeed, the trade data shows clearly that Nigeria is exposed to significant volatility in terms of trade due to trade dominated by hydrocarbons. Our imports, of which a large proportion is from petroleum products, hits 8.2 trillion naira in this data release compared to 5.1 trillion of exports. So clearly you can see how the over 3 trillion emerges. First, our inability to refine our products results in worsening trade dynamics. Crude oil exported actually dropped in Q3 2021 compared to Q2 by about 1.3% that lower, and it was 66% higher compared to Q3 2020. But import of oil products was 34% higher than Q2 2021 and 113.8% higher than Q3 2020. So you can see the worsening dynamic there. We're going to be heavily driven by larger volumes of imports. And there is more value add in refined products, and with inelastic demand, we just continue to go on to be vulnerable. So the Dangote refinery and other projects that would add value locally are absolutely critical. Second, about 80% of the 3 trillion deficit comes from 2.3 trillion imports from China. Our number one import country is China. Meanwhile, we export almost nothing to China. They don't even feature in the top 10 at all. So Nigeria needs to drive more exports, and we need to sit down with China and just say, look, we can't just be sending you 3 trillion naira of deficit in dealing with you. And we have to find ways of encouraging our small and medium enterprises to produce for exports, especially to countries that we buy from, like China. And China should be under obligation to buy more Nigerian goods. Of course, we have to have the goods. Thirdly, we have a high import appetite, and that's because we are still a country that specializes in the lower end of the value chain. No country can thrive on that. And we can't ask people to consume raw material. So it's not about import substitution. Rather, we must go up the value chain locally rather than specializing in exporting raw materials. In countries like Indonesia, they actually have unveiled plans to halt exports of raw commodities like crude palm oil, tin, and copper ore, so that they can attract investment in the country's resource processing capabilities and create more jobs. So these are the types of issues that you really need to face to reduce that deficit.
Yes, Bode, I mean, this is a very predictable outcome, isn't it, when Nigeria's manufacturing sector is still performing below par. Now, looking at data, Bode, what would you say are the main opportunities to leverage a vast market in Africa's largest economy?
Is rich with opportunities. Indeed, the size of the domestic market with rising incomes and growing middle class does offer immense opportunities to do things. But let me just focus on 3 areas. One main opportunity is services trade, not just goods. Globally, services constitute over 50% of global trade, not goods. And I mean exporting financial services, consulting, rail and airline services, architecture, telecom, broadcasting, hotel and tourism. Nigeria is one of the countries that have signed up, for example, to a new initiative under the World Trade Organization to improve the climate and lower trade costs and essentially facilitate services trade. So we should try again, focusing on our small and medium-sized companies to get into the opportunities, especially in a more digital area. The WTO, there's an initiative they've just put in place. Nigeria is part of that initiative. They should just buy into that and try and implement all that is required to open that area. The other area is intra-African trade, huge opportunity. Nigeria exports 758 billion to India, barely over 100 billion to Ivory Coast. And Africa does not feature, if you look at the top 10, even in our exports and imports, we're just hardly there. And intra-African trade is a huge opportunity area, and Nigeria could easily emerge as a petrochemical hub, exporting products to the whole West African axis. The third area I'll just mention is that our ports are not for getting revenues for government. They are to facilitate trade. The paradigm has to change. We should be tracking indicators of trade efficiency, the KPIs, not what we are earning from port services. So the opportunity to debottleneck all the logistics, port services, the timing to get things through the ports. For example, if you go to shops here, you can see food, flowers, and perishable goods from Kenya. That means within 48 hours, they must have gone from Kenya here to the UK. So you need to be able to have seamless processes. Paperwork must all disappear and replaced with automation and so on. When a Nigerian industrialist recently said it is less costly to source an input from China to Lagos than from, say, Kano, then it means we have serious issues that we need to solve at the micro level.
Well, but it seems trade is dominated by maritime transport. Almost all of Nigeria's trade in goods is through ships, as it were. Internationally, are there opportunities to open up other transport modes?
The only reason why maritime transport was developed is that trade in Africa did not develop naturally, which would have focused more on intra-African trade. Trade developed along the patterns of colonial interest. Each African country sent their goods to UK, France, Belgium, Spain, and so on. So less attention was given to domestic and intra-African trade routes. If you look at the EU, for example, maritime transport accounts for just 45% of trade. Air transport accounts for about 25% of trade, and road transport accounts for 26% of trade and 21.6% of its imports. Rail accounts for 2% of trade. In Nigeria, 99.4% of trade is done through maritime. Railroad, air, mail, inland waterways are either almost nil or negligible. So beyond conferences and talk, Andy, we have a lot of work to do, and the opportunities are vast.
Well, the rails are being developed. One hopes that it comes on stream on time.
Absolutely. Bode, I'm not too sure we have any more time to discuss with Bode, but maybe in the 30 seconds, if you can, you did mention there's a need for Nigeria to have a sit down with China. What kind of deal should Nigeria be striking with China to, fix this imbalance?
Well, I think we need to have, call it Nigeria-China trade fair, whatever. We talk about what we have to give China. Indeed, there may be gaps in what we have to offer, but as far as we have things to offer, China certainly needs to buy more. It's unacceptable to have such a huge deficit with China and for us not to even talk about it.
All right, Bode Ososami, thank you very much for joining us. Arise business analyst there.